In today's video, we are going to be talking through one of the very best investments that you could potentially make as a beginner investor or as an expert investor who has been investing for a very long time. Hello, my name's Rachel and welcome back to the channel. So let's cut to the chase. The investment that I want to talk to you today about is a FTSE All-World ETF, and ETF stands for Exchange Traded Fund. So when you're investing in a FTSE All-World ETF, you're actually getting a little slice of different stocks from across the whole world. You are getting thousands of different stocks when you make one simple investment. Now in this video, I want to make sure I go into some detail around why a FTSE All-World ETF might potentially be a good investment for you. I think it's very important to understand an investment in a good level of detail before you make it, which is why I'd like you to carry on watching this video to get a bit more of an understanding as to why a FTSE All-World ETF could potentially be a good investment for you. So the ETF that I'm specifically going to be talking to you today about is Vanguard's FTSE All-World ETF, and the code for that is VWRL. Now there is a reason that I want to focus on that ETF, and that is simply because it has been established since 2012. So we've got a lot more data for this ETF available, so we can really look at past performance and things like standard deviation, risk levels in a lot of detail. Now this ETF is the income generating version of this ETF. Now an income generating ETF purely means that any dividends are paid out to you when you invest in this ETF. So if you invest in VWRL, you are going to be getting your dividends paid out on a quarterly basis for this investment. If you wanted your dividends to be reinvested and you want to invest in a Vanguard FTSE All-World ETF, you could invest in VWRP, which is simply the accumulating version of this ETF. So that simply means that any dividends are reinvested into your investment, so you're not seeing them on a quarterly basis as dividends that are paid out to you. Now, as an aside, for full transparency, I am invested in a FTSE All-World ETF, and the FTSE All-World ETF that I'm actually invested in is the Invesco FTSE All-World ETF. The code for that one is FWRG. Now, I am invested in that purely because the fees are lower than Vanguard's fees. So the fees for the Invesco version are 0.15%, whereas the fees for the Vanguard version, which is VWRL, the fees for that are 0.22%. And I thought it was really important to mention that because I always talk about how important it is to look at fees in a good amount of detail before you start investing, because when you invest, there's very little that you can control, but something that you can control is the ongoing charges and fees that you're paying for your investments, and also the platform charges that you are paying to invest in the first place. So as I said, I'm invested in the Invesco FTSE All-World. However, I am focusing on Vanguard's FTSE All-World in this video because it has been established for much longer. So the Invesco ETF has only been established for just over a year now, whereas obviously Vanguard's FTSE All-World has been established since 2012. And trying to gather a good understanding of an ETF, I think it's better to have a look at one that's been established for over 10 years. But I did want to mention that the ETF that I'm invested in is the Invesco one for clarity. So let's get stuck into why a FTSE All-World investment is a good investment to make. And the main reason is that you are getting a diverse portfolio with a single investment if you are investing in a FTSE All-World ETF. So as I said, you are getting exposure to the whole world. Currently, Vanguard's FTSE All-World holds 3,673 different stocks within it. And the top 10 holdings are going to be names that you have heard of time and time again. So Apple, Microsoft, Nvidia, maybe you haven't heard of Nvidia, but it is a huge semiconductor company that has done particularly well recently. Amazon, Meta Platforms, so Meta Platforms is obviously Facebook, Alphabet, which is Google, so you've got Alphabet Class A and Alphabet Class C. Then you've got Broadcom, Taiwan Semiconductor Manufacturing, and Eli Lilly and Co. And as I said, you're getting exposure to the whole world. So rather than investing in something like the S&P 500, which is focused simply on the US market, if you invest in a FTSE All-World, you're getting exposure to markets beyond the US. So at present, 62% of Vanguard's FTSE All-World is made up of US stocks. Then the Eurozone make up 7.39, Japan 6.13, Asia emerging, so you're getting emerging markets exposure there, is 5.6, Europe is 4.29, Asia developed is 3.89, the United Kingdom is 3.47, Canada 2.26, Australasia 1.87, Latin America 0.98, and the Middle East 0.93. So as you can see there is quite a lot of concentration in US stocks in a FTSE All-World ETF, but you are getting exposure to the whole world. By owning a FTSE All-World ETF, you are reducing the amount of research that you would have to do if you were trying to invest in, say, for example, individual stocks and shares. Research has shown time and time again that actually investing in an ETF or an index fund is often a much better way to go. Sample research from SPIVA or SPIVA has shown that over 10 years, 87.42% of actively managed funds have underperformed the S&P 500. So the S&P 500 are those top 500 stocks in the US, and you would invest in them by buying an S&P 500 ETF, for example. And obviously these actively managed funds are managed by professionals who have the software and the education to be able to try and outperform the market, and very few of them have been able to do so. So certainly as a beginner investor, it might be better to avoid investing in individual stocks and shares and actually invest in something like an all-world ETF or an S&P 500 ETF, because it is very difficult to beat the market. And it's not something that I attempt to do, and potentially it might not be something that you want to attempt to do either. But obviously if you do, go away and have fun and enjoy doing that. But yeah, it's often better to stick with an ETF or an index fund. Okay, so moving on now to risk levels, and this is a key factor that is definitely worth considering when you are investing your hard-earned money. So if you are investing in individual stocks and shares, there's obviously a much higher level of risk than you would see if you are investing in a FTSE All-World. Also, there are ETFs that have a higher level of risk and potentially a higher level of reward than the FTSE All-World. But in terms of Vanguard's FTSE All-World, let's take a look at standard deviation, which is a really good measure of risk. So 5-year standard deviation for Vanguard's FTSE All-World VWRL ETF is 11.81. And with standard deviation, where all else is the same, you want to look for a lower standard deviation because that indicates a lower level of risk. So just to give you a point to compare this to, if you were to have a look at a technology specific ETF, for example, which are known to be more volatile and more risky. So if we have a look at the standard deviation for IITU, which is the iShares Information Technology Sector ETF, you can see that the 5-year standard deviation is 18.50, so much higher than the standard deviation you are seeing for the FTSE All-World. So a FTSE All-World is a lower level risk investment. When you do make investments, your capital is always at risk. So you cannot get a risk-free investment. But in terms of lowering your level of risk, a FTSE All-World can help you to do that. But obviously there is some level of risk. And if you compare that to something like a technology ETF, which is much more volatile and much more risky, you are seeing a lower standard deviation for a FTSE All-World ETF. You can get slightly different varieties of FTSE All-World ETF. You could, for example, choose an All-World ETF that excludes the UK, for example, and historically those ETFs have seen slightly better results. However, what I will say is when you get into excluding different countries, you have to have a better understanding of economically how you think that country is going to perform over the next 5 or 10 years, or however long you are going to be investing into the future. And with the FTSE All-World ETF, you're simply taking away the guesswork, taking away that level of research that you might need to do, or that level of understanding that you might need to have to do things like exclude the UK or exclude emerging markets. So I personally think as a beginner or even an expert alike, it often is the best choice to simply go with a very basic FTSE All-World ETF. Always, this certainly isn't financial advice. I really want you to always go away and do your own research. When it comes to investing and money is, especially at the moment with the cost of living, just so important. So what you're doing with your money, it's your money, it's really precious. I don't want anyone to go away and make an investment based on what I'm saying. I'm simply starting a discussion with you and saying go away and do your own research. Okay, so now let's have a look at the performance of Vanguard FTSE All-World. So 5-year annualized returns, which simply means that every year on average over the last 5 years, it has achieved this figure. It has 5-year annualized returns of 9.78%. Now, obviously, it's not making a steady 9.78% every year over the last 5 years. Some years it will have done very well, and some years it might potentially have done badly. In the last year alone, the FTSE All-World has done particularly well, bringing in 15.09%, and 3-year annualized returns are 6.76%. Now, let's have a really quick look at the growth of £1,000 over the last 10 years. So say you had invested £1,000 into Vanguard FTSE All-World, your £1,000 would today be worth £2,786, and that is making no further deposits into the FTSE All-World. That's simply putting £1,000 there 10 years ago and leaving it, and it would now be worth £2,786 without having to do very much research and also without having to put more money into it. Obviously, when you are investing, it's good to continue investing and potentially invest on a monthly basis and dollar cost average over time. But that is the value of £1,000 if you just put it in there and left it. So obviously we're seeing some really good growth from the FTSE All-World, and certainly historically you will have seen higher growth from investing in something like Vanguard's FTSE All-World, or for example the Invesco FTSE All-World that I am currently invested in, than you would see if you just left your money in a high interest savings account. Even though high interest savings accounts are particularly good at the moment at around 4%, you're still not seeing the returns that you are if you invest in the stock market and specifically if you invest in a FTSE All-World ETF. We have seen historically better returns from the S&P 500, which is the top 500 companies in the US. But I think for the diversity that a FTSE All-World ETF provides, it might be worth looking at that option. Now, what I will say is I'm particularly interested in investing and enjoy making different investments. So I hold a FTSE All-World ETF as my kind of core holding, and then I do have satellite investments around that. So I like to invest in tech ETFs, for example. I have a separate video on that if you want to check it out. And I invest in both my investment ISA and my self-invested personal pension, but as a single investment without having to put a lot of research and time into looking at the investments you're making. A FTSE All-World ETF is a really great place to get started. As always, this isn't financial advice. Please do your own research. Let me know if you have any questions in the comments down below. I will always try to get back to you if I can be helpful. Thank you so very much for taking the time to watch. I hope you found this video interesting. If you fancy subscribing, that'd be absolutely awesome. And if you fancy liking that video as well at the same time, I would really appreciate it. I hope you've taken some value from this video, and I hope you have a really lovely day. Bye bye.